Hello, I'm Paula Doolan. On behalf of the MJA, I'd like to welcome you to our webinar this afternoon, being hosted by Genasys. Just before I introduce our speaker, I'd just like to run through a few housekeeping points. You'll see on the screen there, you should all be muted and cameras turned off. This webinar is accredited for CPD points if relevant to your ongoing professional development needs. The video will be available on our website, hosted by YouTube after the event, and we will also email you for feedback following the event. If you'd like to ask a question, please do by going to the chat button at the bottom of your screen, and this will be answered at the end of the Q&A. So now I'd like to introduce you to our speaker today, and it's brought to you today by Genasys, and Craig Oliver will present on the ecosystem. And Craig was responsible for opening up the first international Genasys branch in London, and since then has become Chief Technical Officer for both the South African and international businesses. And he will, in particular, ask you to consider participating in ecosystems to disrupt instead of being disrupted, as so many were a very interesting presentation ahead. So over to you, Craig. Thank you.
Excellent. Thank you very much. So good afternoon, everyone. Great to be on the webinar today, and I think thanks very much to the MGAA for facilitating the discussion today. It is, I think, a great topic, something I'm really passionate about. Genasys have been part of the MGAA from one of the earlier kind of starts, so for a couple of years, and I think it's a great association. Bringing MGAs together, and it's really a growing area, I think, in the insurance space. So yeah, my name is Craig Olivier. I'm the Group Chief Technical Officer for Genasys. I joined the business around 20 odd years ago out of college. So Genasys provide an end-to-end insurance management solution specifically for MGAs. And my time at Genasys has really been on the technical front, making sure that we're delivering business value to our customers. And my role is really around the product and understanding what we need to do from that perspective. I've also been very involved with insurtechs in the industry, and quite passionate about where insurance is going and how it's been disrupted. And I think the topic today around creating ecosystems of value, be it distribution, be it different tech benefits throughout the insurance value chain. So yeah, I think thanks very much everybody for joining, and let's jump into it. So I think from an agenda perspective, I'd like to start off with covering my view on disruption in the insurance space. Why do we need to innovate? Why do we need to transform? Touch a little bit on how do we do that? And then I think importantly on the topic specifically, jumping into what is an insurance ecosystem, what is the value it provides, various different aspects of ecosystems and how we can leverage those. How do we go about implementing ecosystems? And then I guess to kind of conclude, what if we don't? And I'll touch on a few examples of where businesses have been able to leverage creating value within ecosystems. So yeah, I think let's kick off then from insurance, innovation, and transformation. So I think for me, I've listed a couple of key points around innovation in general from an insurance perspective. And my belief is that a lot of insurance products that we're selling today were designed 50, 60 odd years ago. And a lot of them haven't really been innovated or transformed to different audiences that we're selling to. So, you know, I think the products that we offer out to the market today, we really do need to look at, are they still fit for purpose, given the risks we're insuring, given the way we price insurance, the way we distribute insurance. I think to my second point on the slide, we're also targeting different generations. And I think, you know, there's been lots of discussions around millennials and how they behave and potentially, you know, even what's important to them. So, you know, I think when it comes down to rental of property or purchasing of vehicles using Uber, we're selling to a different generation, and I think we need to be quite au fait with what they're looking for from an insurance perspective. I then kind of go further in saying that we're also selling and insuring risks that potentially didn't exist previously. And I think some good examples around that is cyber. I think specifically in the COVID scenario where we've all found ourselves working remotely, a lot of companies prior to COVID lockdowns were trying to protect everything inside their internal network. And immediately after the lockdowns started globally, we needed to open up all our networks to let remote workers in. So that's really sparked a lot of cyber risk. And again, it's about, I think, looking at how do we ensure that risk? How do we prevent it? So cyber is a good example. I think drone insurance is another good example. And liability insurance is also changing in the way that 3D printers have been introduced, driverless cars. So it's a lot, I guess, around potentially not insuring the risks we insured before, but actually looking at insuring it differently from a product liability perspective. And then I think also, given the markets we're selling into, is looking at a more personalized or bespoke insurance set of cover. So being able to almost understand where our customers are from a life stage perspective, and be able to recommend bespoke or tailored packages specific to a potential customer, and leveraging a lot of data capabilities out there from a data enrichment perspective, from artificial intelligence and machine learning, and being able to understand the risk and be able to suggest cover, which I believe really adds a lot of value to the end consumer out there. And then I think risk mitigation is also something that I believe is something that we need to look at, is not purely offering insurance cover for risks that we know that are out there, but being able to almost offer value-added services as part of insurance to be able to ideally prevent a risk from occurring and mitigate that risk. And I think there's quite a lot of good use cases in that space, which relies on digital ecosystems. And some examples of that is things like IoT devices or Internet of Things devices, being able to proactively understand your risk much better, and be able to mitigate potential losses. And we worked with quite a few customers around being able to put IoT devices on boilers and be able to actually manage potential bursting of boilers. It goes wider, I think, in the smart home space around digital camera technologies, and I'll touch a bit on that, some of those use cases down the line. But I think one great example that we worked with a customer with was around liability insurance, and specifically directors and officers insurance. And their view was, well, let's offer our directors that we're covering IOD membership, which then allows the directors to actually go on a lot of training, understand their fiduciary duties, and potentially then mitigate the risk. So I really believe if you can offer insurance, supporting it with risk mitigation mechanisms, be it IoT devices, be it training, at the end of the day, you're benefiting the consumer as well as the carrier behind the cover. And then I think what we've also seen a lot is a lot of the big tech companies out there are looking to embed insurance as part of a product offering. So if you're purchasing certain goods or you're purchasing a vehicle, and I think Tesla is a great example, to actually be able to provide insurance as part of the purchase. So it almost becomes a value-added capability that comes with the product, and becomes a one-stop shop. And I think the whole ecosystem benefit is the ability to be able to kind of bolt on insurance as part of product offerings. And a lot of this is facilitated around the use of data. And I think a lot of you would have heard the phrases like data is the new oil. And there's so much data out there. And if you've got the capability of being able to consume that information in data in a structured format and be able to use it to price risk differently, to cover risk, to manage fraud, it really, I think, does set you apart from some of the competitors out there. And then I think finally, the ability to digitally engage. And I think from a COVID perspective, we've also seen that customers out there are not engaging in traditional manners anymore. They're engaging and want to engage digitally, to the point that potentially it even becomes regulation down the line that insurance companies, MGAs, brokers need the ability to provide digital engagement capabilities to their customers. And that covers everything from quoting and binding, being able to register claims, to inquire on product offerings and what customers are insured for, all the way to being able to pay claims, access documentation. And what we've seen a lot of that is that that digital engagement model needs to be available 24/7. It needs to be available via mobile devices, and even going further to provide self-service and potentially even kind of conversational user interfaces or bots where customers can engage with your organization in a real digital manner. So I guess to summarize, I think insurance today is really ripe for innovation, thinking out of the box, and leveraging a lot of the points I have on the slide to be able to look at what different areas of innovation needs to happen from an insurance product. I've often said to a lot of people I've spoken to is that in order to innovate, I believe there's 4 key areas that you need to touch on to actually make a difference and be able to innovate. And I think firstly is the ability to set up and create an innovative product. Given my first point around insurance being created 50, 60 odd years ago, for me it's about understanding what and who we're selling insurance products to. What are they wanting? What does it cover? How is it priced? Taking into account these new risks that we potentially need to cover, the personalized aspect of offering customers what they need at the right time. And I think it's all driven based on customer being first, understanding your customer, and from there having the ability to provide and design insurance products that innovate. So I think that's the first key pillar. The second pillar then is to be able to get a carrier or capacity to support this innovative product, and often it's quite different to what traditional insurers have underwritten in the past. So there is potential risk specifically around regulation, but I guess what we've also seen is it's sometimes difficult to convince carriers because there is risk, or they are afraid of cannibalizing existing income and revenue streams. So if a carrier is writing a lot of motor business and you're innovating that in a way of pay based on how much you drive, well then potentially they're concerned that their portfolio may be disrupted. So it's getting carrier buy-in or capacity. And then the third point, I think, which is really important, is the technology that underpins potentially new distribution channels, innovative products, usage-based type insurance, but having the ability to have a technology platform that can support this disruption and innovation. And then I think probably the most important and potentially the most difficult is distribution. Be it direct to consumer, be it direct to consumer via affinity partners, be it broker or intermediated distribution, and even going on to full online kind of campaigns and driving traffic to direct to consumer journeys. And what we found is that's often the most difficult part, is to be able to drive distribution. And I think for me, that's really where the ecosystem adds so much value, is the ability to be able to partner with affinity partners and be able to leverage a digital ecosystem to be able to get your products out there. So yeah, I think 4 key areas for disruption. So I've got a quick video that I want to show which talks to the insurance industry and what we should be looking at, and then we'll jump into more around the ecosystem.
The insurance industry is undergoing a perfect storm. Changing customer demands, advances in technology, increases in data, the The impact of natural disasters, shifting demographics, and evolving regulations are just some of the factors combining to shape the industry to its roots. Customers want more from their insurance. Whether businesses, consumers, or businesses offering services to consumers, they all now expect the speed and elegance of digital retail, conducting business when they want, where they want, using the channel of their choice. And customers are increasingly savvy and able to compare offerings and prices with the competition in an instant. Technology is creating a wealth of new possibilities. The advent of big data creates opportunities for insurers to make use of unprecedented insights into their end customers' life, property, health, wealth, and behavioral patterns. Advances in artificial intelligence are allowing insurers to sift through this data quickly and efficiently, enabling more personalized approaches to risk management, reduced liabilities, and lower premiums in return. The ability to access data faster than ever before also allows insurers to settle claims more quickly. What used to take weeks and months is now happening in days or hours. In the past, a common strategy for insurance players was to wait for the competition to move first in order to see if a new direction was successful or not. But that strategy doesn't work in this disruptive environment, with new competitors from outside the insurance space. All these changes have given rise to new players with new ways of working and competitive business models. By the time you decide to move, it may be too late. So, as the insurers look towards a very different market in the future, how can they navigate change and achieve success? In this environment, it's important to learn fast and, if you fail, fail quickly, so you can learn your lesson and move on. Established players must find ways to be more versatile, to think like a disruptor and act like a startup, while all the time maintaining a clear focus on the customer. In times of rapid change, it's hard for executives to separate fact from fiction, easy to be seduced by the latest trend, and tempting to be drawn into blindly copying what the competition is doing. But following the crowd is not the answer. The most successful companies across industries understand that they have to build a strong and distinctive identity that allows them to carve out their own market position, rather than reacting to a market that has been created by others. Creating such a strong identity means that you must be very clear about the way you will add value to your customers in the future, your way to play, and also very focused on building the few differentiating capabilities that will allow you to deliver that value better than anyone else. Once you know which capabilities your organization needs to excel at, you can then develop a capability agenda to take you from where you are today to where you need to be tomorrow. It's important to consider how quickly you can build these new capabilities and by when you will need them to be mature and integrated. Should you build them organically? Should you acquire them through M&A? Or should you partner with other players? Being very clear about the specific capabilities you need to excel at allows you to focus your entire organization on what truly matters to your customers and build a powerful engine of growth. Disruption is here to stay, and not everyone will succeed. It is the players who have the courage to commit to an identity based on what truly differentiates them who will have the opportunity to shape the insurance industry of the future.
So I think for me, and courtesy of PwC, I think it's a great video explaining what consumers are wanting out there. And, you know, it does, I think, excite a full view of insurtech and how companies should go about implementing strategies to enable innovation and disruption. And the customers are driving this change, looking for personalized options, looking to be proactive. You know, the first mover advantage is definitely something that you need to keep in mind. Ability to fail fast, pivot and change, and have the agility to be able to do that really quickly and test markets out there. But it does definitely require a culture within organizations to adopt the change and define a plan, as they spoke about, a compatibility agenda, and using ecosystems then to really support this from a focused capability perspective as well as a distribution agenda. So I think, yeah, then moving into what is an ecosystem. So looking at the real definition of an ecosystem, and I think in the traditional terms, it is a community or group of living organisms that live and interact with each other and support each other, and it allows for operational and efficiencies. But I think in the specific insurance and technical terms, it is, I think, at its most basic, it's an interconnected network of companies, people, processes, linking them together in a digital fashion to create technology benefits, but again, then distribution benefits. And I think what's also key is that it creates benefits to companies as well as the consumers. So by creating ecosystems, you get the benefit from both sides. So in my mind, the value of creating ecosystems then is the ability to engage with affinity partners, being able to potentially embed white labeled product offerings managed centrally into different distribution channels. And from a Genasys perspective, we've gone and created technology capabilities to add one line of code to an existing website to be able to deploy a full quote and bind journey. Which makes the barrier to entry so much lower to engage with affinity partners to be able to distribute innovative product in a very structured manner. The other aspect then is creating these new distribution channels, but importantly around digital, around affinity. And I often refer to a point which I call the micro moment, which is being able to engage with the customer at the right time to provide the ability that they're in a position from a life stage perspective to buy the insurance. And I guess a good example in the banking space is if you end up going to an ATM at the end of the month trying to draw some cash and you get the insufficient funds kind of message. At that time, offer the person a potential short loan. And you have a very good chance of actually then getting the consumer to actually opt for that. I think another good example is at an airport, as your suitcase goes off on the conveyor belt, if you could pop up and say, what about purchasing travel insurance or luggage insurance? At that point where the customer sees the luggage going off, potentially you'll have a much better rate of actually them purchasing the insurance. And then focus technology and expertise from an enablement perspective. So, the ability to leverage a lot of insurtechs out there that are very much focused on certain key areas of the insurance value chain and be able to integrate that into a wider ecosystem and not trying to, I guess, be everything to everyone. And utilize partners that add that value at the correct space. So, a lot of insurtechs out there are complete experts in a very small area of potential engagement with the customer with technology that supports it. And if you can integrate that into your wider technology landscape, you get so much more benefit. So for me, these are the key areas around the value that an ecosystem creates. So the various aspects of an ecosystem, and I like this slide with various different insurtechs playing in different areas, but there's, I think, a lot of different areas throughout the insurance value chain that adds value. And our belief has always been to try and not be everything to everyone, but integrate to these beneficial technologies throughout the space. So, this further drives the requirement to create ecosystems where the technology can be plugged in and incorporate the right technology at the right time. So, there is the awareness aspects of being able to provide capabilities to tell customers about the options out there, give them choice to be able to decide what products they should buy, what type of covers they need. Obviously, facilitation around purchasing and providing simple payment methods or engagement methods, leveraging P2P type insurance as well as IoT devices, and then through the various different use cases from a use perspective. So being able to disrupt policy administration, claims, services. So I guess the important thing is that there are so many beneficial capabilities throughout the insurance value chain. It's about finding the right partner and being able to plug that technology in at the right time through the insurance value chain. So how do we go about implementing an ecosystem? So I think firstly, it is about finding the right partners, the technology that makes sense. And my last point actually on the slide is don't use technology for the sake of technology. You know, there's a lot of buzzwords out there in the industry around artificial intelligence, blockchain. But I think what's really important is use the right technology to solve the business problem that you are trying to solve. And that really does drive then utilizing the correct partners, but importantly, the ability to integrate that back into your technology stack. So open architecture is really key. Platforms out there having APIs that are supported, that can allow these different technology capabilities to integrate with each other to create a seamless interaction. And then look at deploying this into existing customer journeys. So, but yeah, I think it really is a case of making sure that you understand where you want to innovate from a product perspective, use the correct technology to support that, and then have an end-to-end technology stack that supports it. So this slide is some of the partners that we've actually integrated to, but I think what I was, and I'll talk to a couple of them, which is I think great different beneficial technologies that help throughout this insurance value chain. So I think if I start with DataWalk at the bottom, DataWalk is a claims fraud detection platform, and what we've done by integrating into DataWalk is it provides the ability to be able to, in a green, amber, red traffic light type scenario, automatically evaluate any claims that occur within an organization like yourselves and be able to flag it. Is it green, amber, red? Is there potential fraud happening? And the way they do that is open up universes of data. So being able to understand everything about the policy and about all the various different stakeholders within the policy. Who was the driver of the vehicle, as an example? Who was the broker or intermediary that sold the policy? What repairers are being used to repair the vehicle? And be able to triage all of that information together to understand if there's any trends that need to be investigated further. You know, they go further even into social media integrations. And I think a good example they used was a customer was claiming for personal injury, but over the weekend they were posting photos on social media, jet skiing on a beach somewhere. So it's those kinds of things, being able to integrate that back into the platform to be able to make those decisions in a much better way. Viper is another very interesting partner where what they've focused on is data sharing back to carriers, specifically in the Lloyd's market. And again, you know, either you need to go and build all of that capability yourselves to integrate specifically where Lloyd's is going today around API enablement, or alternatively partner with a company like Viper that will facilitate that integration and do all of that heavy lifting for you. So from our perspective, we've gone, let's not build that, let's integrate. I think another really exciting insurtech is Extract 360. And they focus specifically around motor telematics and being able to visually recreate the scene of an accident. So they've got really three different value propositions. I think the first one is around being able to visually redraw the scene of an accident and what happened, and you can send those links out to third parties or to the insured themselves and triage that information coming back to identify what actually occurred. But I think importantly, telematics graphs still today is a spike graph, and it's really difficult to actually read that and understand what happened at the scene of an accident. So with very lightweight telematics information, leveraging Google Maps, you can create a video to be able to actually reconstruct the event, see where the vehicle was driving, where the impact happened, what was the G-force of the impact, be able to calculate estimated repair values, is the vehicle repairable or not, so you know where to tow the vehicle to a salvage yard or to a repairer. and then even go further to calculate potential liability decisions if there were third parties involved. So it really does help you then to manage a lot of the fraud aspect of motor claims, being able to visually see this from a claims administration perspective. I think another really exciting one is Percaso Inform. They look to provide data enrichment services around multi-bureau data, being able to understand potential customers a lot better before you price risk and before you accept that risk, and even taking it further to backbook integrations. But it's about leveraging data as much as possible, understanding your risk, pricing accordingly, underwriting accordingly, and again, leveraging a partner that really supports that really well. And then I think one of the ones we've actually started integrating with now is a Microsoft service called Power Automate, which is a full workflow management solution, which allows you to integrate a lot of your existing technology into a lot of additional capabilities out there in a zero code, very visual way. Flowgear does something similar. And then with leveraging existing hosting providers like Microsoft Azure, Google Cloud Services, or AWS, they've created a lot of those capabilities in the cloud, and being able to integrate your existing insurance management platform, hosting it in different cloud providers, but integrating into some of those native capabilities really does add a lot of value. So there's a whole lot of other logos, I guess, on this slide, but you know, I think what's important is to integrate the right technology at the right time, and was hoping that that was useful just to show you some of the capabilities of ecosystems out there. And then I think, yeah, it moves then into, well, what if we don't? And I think the key thing for me is that there is, and as you saw in the PwC video, is that there's definitely a first mover advantage in not following existing customers that are disrupting, but actually trying to understand where we should be going and be that first adopter to gain the consumer buy-in. I think the other point for me is that if you're not partnering and creating and using the ability or the benefit from ecosystems, it does distract from a focus perspective. So, you know, the more partners you can bring in to support the different disruption that you're looking for, the benefits, or it creates benefit for everyone, and not, you know, focusing, you then focusing on what you do well is dividing product and selling, but then leveraging partners to facilitate that. And again, I think a lot of partners out there are looking to partner with MGAs and insurance companies, and by having that ecosystem mindset allows you to actually create these partnerships with companies out there that are desperately wanting to distribute product differently and create different distribution channels. And a lot of the benefits that ecosystems does create is internal efficiencies, and being able to automate a lot of processes, pay claims automatically if there's certain criteria in place. So by not adopting an ecosystem, you still end up potentially in very manual exercises for certain parts where you can gain a lot of this internal efficiencies. And then, you know, given I guess the COVID situation around being able to distribute products and engage with customers digitally, there's a lot of partners that can, you know, assist in enabling those digital journeys. And then, yeah, what I'd like to then cover is maybe 4 key areas or 4 examples of, I think, companies that have really leveraged ecosystems well, and potentially didn't even start in the insurance space, but insurance then came off the back of that. So, you know, I think these 4 logos on the slide have benefited by creating and using ecosystems to support the insurance offering. So Flash Flood, I think some of you may know of. It's very much a parametric type insurance. So firstly, leveraging IoT devices, so they've got a device that gets installed in basements, and it measures potential flooding or water notifications, and then I think importantly mitigates the risk. So if they can shut off water valves, that can all be done electronically, but it cuts out a lot of things like no need for loss adjusters anymore, because you actually know what happened from a risk perspective. And I guess importantly then, if there was a flood, pay the claim automatically. So again, providing this ability to leverage ecosystems, and at the end of the day, giving consumers at the end of the day real value. I think another good example is Neos. So they started off creating smart cameras, and I've actually got I've got a few in my house. So it's a great Wi-Fi camera. Basically, plug it in and install it. It firstly gives me, as a consumer, the ability to monitor my home when I'm not at home and be able to see what's going on in different rooms and different areas. But you can imagine then the benefit from an insurance perspective, because now you actually know what's going on in each of the different properties. So I guess there is a bit of a big brother concern, but from an insurance perspective, you've got the ability then to insure the risk a lot better, because you understand what's going on inside there. And the devices go even further, that it can geo-fence an arm. So if I leave my property, it will automatically arm my house and then monitor any movement or any sound and notify me if it's picked up anything abnormal. So again, it's driving this ability to mitigate risk. And they're going a lot further now to provide smoke detection, flood detection, but underpinned by an insurance offering, leveraging these different IoT devices. So I guess a perfect example of creating ecosystems which provide consumers benefits, because there's a value add to the consumer, not only from an insurance perspective, it's driving risk mitigation, and obviously it's supporting the insurance capability behind it. Yeah, and then I think the next example is Flock. So Flock kind of stemmed out of the need to insure drones. And myself personally also ended up purchasing a drone some time back and actually lost it. It flew off, but it was replaced. But their real claim to fame is being able to insure drones, but on a usage-based type insurance. So insure it per flight, per hour, for a day, and pay based on this usage-based insurance model of the usage that you're actually utilizing the device for. And drones are extremely well connected from a flight management perspective and a flight register perspective. But then they've taken it further again around risk mitigation and been able to educate the pilot around conditions around them based on their location. What's the weather like? Are there any areas that shouldn't be, the device shouldn't be flown in? And then also supporting the pilot from a training perspective. So again, really driving risk mitigation, but being able to integrate into all of these different ecosystems out there. And then Laka, I think, is also another great example of P2P or peer-to-peer type insurance, where really driving the ability to create a community where myself as a cyclist can recommend other cyclists and be able to almost self-insure to a degree based on community. So it's a friendship approach. So yeah, these are just 4 very, very high-level examples of, I think, companies that are offering disruptive insurance. They've seen the need to disrupt and insure risks out there differently, leveraging technologies or different technologies that add value from an ecosystem perspective, and really at the end of the day benefiting the consumer and the insurance company. So yeah, I think hopefully that was very useful and gives you a view on ecosystems and where the benefits are, and I guess how we should be looking going forward on innovating products, innovating technology, leveraging ecosystems to add value.
Thank you very much, Craig, for a very, very interesting presentation. And I'm sure many of our MGAs watching you today will certainly now consider participating rather than be disrupted. I'd also like to thank our attendees for joining us today, and for those that regularly attend our webinars, our next webinar is on the 5th of November. and that's on risk management from an MGA perspective, and it will be held by Boston Thomas. So once again, thank you, Craig, and yeah, thank you very much, and to Genasys as well, and thank you all for joining. Good day, have a good day. Bye-bye.